But we're building technologies that let us create internet native organizations. We're building technologies that let us bring together people from around the world to interact, to collaborate together, to build stuff in a way that wasn't possible before. And so that is an evolution of what Bitcoin has done, what DeFi has done, what blockchains have done to enable censorship resistant global participation outside the bounds of what was historically possible.
Hello friends, Jess here from C Club. Welcome to Season 3 of Building at the Edges. We host conversations with the top innovators, thinkers, and builders at the intersection of crypto and community. I'm very excited to bring you a long overdue conversation with one of C Club's earliest collaborators, Rueben Bramanathan. Reuben is an investor at Ideo CoLab Ventures, and he's been deep in the weeds with us at C Club, helping to structure the DAO and from the earliest of days, figure out how to build and operate this thing, frankly. We talk about the reality of working in DAOs today, the vision Reuben sees DAOs progressing towards, and why he's so excited about it. We get Reuben's current thoughts on structuring a great DAO, and he shares how to launch a token in 2022 and to do that from a community perspective. With Reuben's deep legal background, we get into his perspectives on the current risks associated with participating in DAOs and the best practices to navigate it. Of course, there's no legal or financial advice. Reuben is definitely not your lawyer, so please keep that in mind. It's a great conversation with Reuben, so let's get into it. Reuben, welcome to the pod.
Hey, thanks, Jess. Great to be here.
Have we done one of these before? I can't remember.
I think this is the first time. Look at us. We're finally doing it.
It's crazy because you were somebody I talk to on a weekly basis and have been involved in C Club from like the earliest days. And maybe that's a good place for us to start. From my recollection, I think Brian Flynn probably connected us, and you were one of those original 11 people in the Telegram chat exploring this sort of world of social tokens. But I'm curious if you sort of take yourself back to that time period. What were you working on? What got you interested in this space? Like, how did you get to that first connection point with C Club?
Yeah. As I recall, we were just hanging out in that Telegram group chat. It wasn't really like much of a plan. It was pretty organic. I think at that time I was working at Zora or around that time. So I was pretty close to a bunch of folks in the space. I launched my own personal token in 2020. And I think off the back of that, we were the folks thinking about personal tokens, social tokens, fan tokens, community tokens, and everything that they've become known as since. And so I think you can see in the history of those names part of the evolution of the space. So yeah, definitely it was a privilege to be there, to have been there since those days.
Yeah, it's interesting as I sort of have been reflecting a lot lately on how to be the most useful to early stage community token projects, the work that we do in depth at C Club, and sort of realize that a lot of, like, I often gloss over what happened in those early days in many ways because it was just so emergent. As you said, there wasn't some big plan. There wasn't like a roadmap or a framework that we were running through. And so it's sort of easy to overlook, I think, a lot of the things that just happened to go right, or maybe we were strategic about doing right, or probably some mixture of the two. And I think the biggest one for me is just like how the core that we got right early on was getting people who are truly interested, passionate, just like explorers of something that wasn't even able to be defined into a digital room at once. And I think that can be a difficult thing to do in bull markets, and it can be a difficult thing to do as like a space grows. And there was sort of just like a natural emergence that like was so powerful there.
For sure. I think that's a great point. It's harder to do when there's a million and one things going on in a bull market, when everyone's being pulled in different directions and everyone's distracted in a lot of ways. I think at those stages, you naturally get the folks that are passionate about exploring the edges, if you will. But it's just like, it's easier in that sense when everyone's kind of a bit of a misfit, a bit of an oddball.
Yeah, and I think there's like a less, and I don't know how I sort of build this in today, but there's a less, like it didn't have to become anything. Like there wasn't like a pressure for it to become something, and there wasn't even clarity that would become something. And so both that's like a filter, and then also, I don't know, for me personally, being very involved in moving things forward, it was like such a weight off my shoulders in a certain way. Like there was, both having the support of that early group and also that there was really no wrong to be done as long as we were building with the right intentions and just sort of chasing down whatever the interesting thing was. Yeah, it's a bit different when you have like capital being raised and, $100 million valuations of projects that you can sort of comp out against and like a thing starting to take shape. I mean, beneficial in so many other ways, obviously. But I was also thinking about like the pieces that sort of it's almost fair to say we're coming into a version of that time again, right? There's a lot less intensity in the market right now. It probably will continue that way for some amount of time. And so we're going to be edging up against a new time where people are only going to be in crypto if they're the missionaries, not the mercenaries. I think most people in the space think that is a very valuable time and a useful thing to have happen. But there's, when I think about where we were in 2020, there's a number of fairly substantial innovations that kind of led to to say your ability to mint a token, for a token to have a market that exists, for to be able to gate membership and access. So this would be like Uniswap having launched, the proliferation of easy contracts to mint things, Coinvise eventually coming out, and then Collabland, and those are sort of some of like the basic building blocks that enabled this whole space to sort of start to piece itself together. I'm curious if you sort of sit today, because you get to look at a lot of deals and see what's happening. What has been built or is being built right now that you think might be like an enabling force for whatever the next evolution in this, let's call it, social crypto world?
Yeah, I think that's right, in that, there are those building blocks that need to emerge for the next wave to be viable. I think some of them look like what we saw in the last cycle, the things you alluded to, obviously including, the ability to launch a token, to mint an NFT, to gate access, to distribute airdrop, to, recognize ownership and membership, and all these kind of tools that slowly have emerged. And I guess it's kind of like, well, what was missing in the last cycle in terms of the tooling? And I would say it's the same kind of things that we've been seeing through the last few cycles, which is just like a lot of it on the experience layer, we like to call it. We talk about basically every aspect of how a user interacts with a protocol or a community. And so obviously wallets are a big aspect of that, or whatever wallets become. The boundary between a wallet and a profile, or a wallet and a signing device, like those kind of differences, I think there's a lot of room to explore there, and especially in the next phase of Web3 social, which we're already starting to see. So long story short, I think that a lot of it is on the user side. Obviously on the, the infrastructure side, we're going to see a lot more in terms of throughput and performance and scaling solutions. And I think that's super important as well. That goes on continuously, right? So I think it's what's going to enable the next wave. It's going to be more stuff on the experience layer.
So where do you sit on I think there's a really interesting discussion that happens around that experience layer. And I think there's like a tension that sort of exists there. It's very easy, I think, to say we need better user experience in crypto. And I don't think anybody would disagree with that. The question is like, what trade-offs are you willing to make to achieve that? And I think that's really where a lot of the ideas behind, improved UX start to sort of fall down. And that, if you truly remove, the self-custody of assets or identity that kind of lives at the wallet layer, what are you giving up on? And I'm curious where you sort of see where you fit in that discussion. Like, do you see a path where we actually obfuscate some of the crypto and that actually gets us to a better place? Or do you think it's actually more that users are going to get better at using these tools, more comfortable at using these tools? It might be a slower path to adoption, but that's ultimately going to be the hard tech wins the day type angle.
Yeah, I'm definitely more to that end of the spectrum, even though, I'm part of a firm which is, firmly built on design principles. I think that it's because it is so hard to build the right experience in crypto. That's why design and product is so important. But the reason that it's so hard is that this is not a game. We're not building fun new things because it's, quirky and interesting and new. I mean, there's some of the benefits, but we're building technologies that let us create internet native organizations. We're building technologies that let us bring together people from around the world to interact, to collaborate together, to build stuff in a way that wasn't possible before. And so that is an evolution of what Bitcoin has done, what DeFi has done, what blockchains have done to enable censorship resistant, global participation outside the bounds of what was historically possible. I won't go on too much of a rant right now, but I think in general, that's my position, that this is going to take much longer than we think. And yeah, there are always trade-offs, but the more trade-offs we make in favor of faster and easier, then the less resilient the systems that we build will be. And so we need to be very careful about that.
Yeah, I mean, I love I'm fascinated with the criticism of crypto generally, and I think it's often well-placed, often misguided. But like the question I keep coming back to is like, if it could be done on a database, why isn't it done on a database? And I think the things you're pointing at there are the reason it shouldn't be done on maybe a centrally controlled traditional database. And so I always think like it always comes back to tokens and token ownership in my overly simplistic worldview. Like that's like the reason why if we were trying to distribute ownership in networks through a traditional legal system, it would lead to centralized organizations and inability for many to participate. And in the crypto and blockchain world, we sort of have that as like I think that's where I get the most conviction on why crypto, and I sort of see like where people fall in that line of whether that's important or not important seems to dictate their willingness to, I guess, look past some of like the obvious challenges and barriers that still exist in this space and see that as like a valuable future to push towards.
Yeah, totally. I mean, if we are just trying to compete with Web 2 by replacing Web 2, one, we're not gonna get there, and two, like what's the point? Like the whole difference is this kind of unstoppable, permanent machine that's going to enable so much more creativity and so much more collaboration than is possible in the existing system. And we can dive more into this when we talk about DAOs and legal stuff, but I think that's the critical point.
You used a word that I've been trying on a lot to describe the space of internet native organizations. Some of the work we've been doing over the last quarter is trying to figure out what is the right level of abstraction or the right word to use to describe the things that we're so passionate about bringing into existence or supporting at C Club. And I feel like DAOs is both very specific and overly general term in some ways. And I really do love the idea of internet native organizations. This idea of like they are born of the internet, they are owned on the internet, they create value and that's captured on the internet. But I think like if we sort of look at the lens of like why internet native organizations, I'm curious, you've been building towards this in various ways for a large part of your career and focusing on this increasingly. Where does that passion come from? What are we trying to achieve here?
A few places. I think what we're trying to achieve is new types of organizations that are inherently more equitable, they're more open, they're fairer, they're accessible to all. I've said the same thing a few times, but those kind of values are really important. And I think that the reason that these are so important is if we think about the ability of people globally to participate in different parts of the economy, it's been limited to date by obviously a number of factors that we now have the technology to overcome, or we have the technology with that potential. So we have the ability to send money globally without a bank account. We have the ability to communicate globally with anyone. We have the ability to kind of create tokens and assets which represent anything we can imagine. The combination of these tools naturally should lead to rethinking of the ways we've been building organizations. And so there's obviously a broad range of stuff and directions we could go in. But in doing that, I think we really need to think about the principles we're building for. And for me, it's that fairness and openness above pretty much anything else.
Yeah, I very much agree there. Like I think early in my career, there's big news today as we're recording that Elon Musk looks like he's going to buy Twitter again. And, Twitter was probably one of my first and favorite social networks to be a part of back in 2017. So like, I think my Twitter account can drive now in many states, which I think is crazy to think about. And it very much felt like, the small secret thing that gave me access to this weird world of Silicon Valley. And there's millions of people participating in this network. And me as an early user, member, contributor there, just not having any, like they might as well have been on Mars, the ownership, and where, in some ways it really reduced and made the world feel small, and then I could sort of get access to that information. And yet there was so much of that iceberg hidden below. This is like the decisions, the business models, the direction that these networks are chasing. So I think it's interesting, at least, in my experience, it feels that the bar is actually pretty low to actually really make meaningful progress towards opening up organizations because they are so closed right now. You're so far away unless you are an investor or an early employee in most of these networks. There isn't an opportunity to participate beyond being a consumer. And I think that's the interesting thing. It's like the evolution of consumers into members, owners, participants, whatever there's almost like a whole bunch of slashes that need to get put between those things.
That's true. I think that the slashes are pretty important because they define how different types of contributions can still be valuable. I think that's another aspect of DAOs in general, that with this open framework for contribution, we can actually value the different types of contributions that historically have not been valuable. And I think as a part of that, people that come to be part of a community or part of a DAO have a bunch of different motivations, right? So you mentioned a few of them there, the kind of the membership or the collective. I think there's also, people might be financially motivated. People might be motivated by, having influence or sway or use it as a flex or whatever, that membership. So we can redefine organizations in a way that serve our relationships as humans and communities, and not the other way around, right? Not having to fit ourselves into a role in a corporation or in a structure like that. And that should just enable so much more creativity and better connection.
I love this sort of lens at looking at the space as sort of like there was a time where it was called the future of work. Everybody would just call this the future of work, right? It's like, maybe more scalable, more accessible. In the ideal world, you're able to bring your full genius and nothing but your genius to various projects and earn a good living for doing it. And I think like that is sort of the ideology or philosophy that's led to so much excitement in the DAO space. But I think it's also fair to say that a lot of those sort of early experiments in broad, flat, hierarchy-less organizations have sort of struggled in different ways to make progress. I think it's a fair comment to say that corporations are better at coordinating in early stage projects than DAOs are. And so we've seen, a lot more structure, a lot more thoughtfulness in thinking about how we actually coordinate groups of people towards goals. And I think there might be a world where people would look at what's actually happening in DAOs today and say, hey, that's like really just a corporation with a better name, or maybe it's a couple of baby steps away from that corporation. And yet I think most people that are building in it see like it as maybe a pragmatic step towards that bigger thing. So I wonder if you can comment sort of on like the reality of what working in DAOs are right now and how you sort of see that progressing, and if you do, towards this bigger vision that you seem to be so excited about.
I think that with a few limited exceptions, corporations are going to be better at building product than DAOs for some time. I think that there are some activities that are going to be, for example, investing DAOs, right? I think that's a pretty good use case for having DAOs with legal structures that can do a bunch of stuff. I think that for building community or building protocol, that's where we should think about this new way of building. And I think that a lot of the lessons we learned about hierarchy-less, flat organizations were still through a lens of building products. And of course, if you're going to compete with companies on that, you're going to run into problems. But there's been a shift in thinking, thankfully, about what DAOs are actually building. Even from an investor perspective, the idea that a DAO or a startup or a project could be building community as its product is new. And, Seed Club's obviously defined or blazed a lot of that trail. So I think that's a really good point, is that, there are some things DAOs are going to be better at. I think there are still a lot of things that corporations are going to be better at. And we shouldn't try to end up with the worst of both worlds, which is a DAO which replicates a corporate structure.
This is the first time I've mentioned on this podcast, but Toby Shoren's most recent piece, After Lifestyle, I think has done a very good job at capturing the importance of sort of subcultures. So he would maybe say subcultures instead of communities, and would define Bitcoin and Ethereum and maybe what ultimately we're building, FWB as these sort of subcultures, and really defines them as something other than, it's not a corporation, it's not a DTC brand that's just trying to plug into a community. There's something else here. And I think that is something that I still see a lot of like the broader crypto space not quite recognizing, and many investors still not quite seeing that as like what we would call like a new asset class, or like a community as a business. It's going to be super interesting to see that evolution over the next little while, because from where I sit, I see nothing but that bubbling up. Like that's and a renewed focus or awareness around that being the thing. Like Toby describes it as types of guys, right? Like if you're able to own a meme, like the Nouns types of guys would have the Nouns glasses in it, and probably a bunch of CryptoPunks, and there's like a subculture that kind of exists there. And what happens when you sort of have coordination tools and financial tools and all these things that are being built in the broader crypto space? I think it's a very interesting thread to pull on, but it's very much not trying to build product.
I'd say that the exceptions might be if you have truly a DAO, in the sense that it's a brand or an overarching kind of umbrella that can fund smaller teams that are actually building the product. So we're seeing obviously Nouns and others experiment with that kind of model. But then that just goes back to, okay, well, the people actually doing the building are better placed in these smaller, tight-knit teams. But then the actual, allocation of funding and the ability to connect through one brand, that's where the DAO is. So I think a lot of the time we get confused about what the DAO actually is in any case.
Yeah, I think about Seed Club as like the Seed Club network would be like the DAO, which is, the resources that exist there, the social capital that exists there, and that including the people who are members and owners and voters. And allocating capital is ultimately probably like, if I say like what are DAOs good at, they're good at forming capital and allocating capital. And then there's a couple of question marks around, iterating on that, on allocating capital well. I think, Nouns does the great job at forming capital, a good job at allocating capital, and I mean, probably some of the best jobs at allocating capital. And then like, I guess the missing piece I see from much of this is like, how are we ensuring that we're learning from that process and getting better at allocating capital moving forward? And so I guess maybe that's a place I'm interested in exploring, like because I think it's very doable. And maybe this is where reputation comes in, or where I think right now it's still very much being tied together through social ties, social capital. Like, I've got this money, I'm going to go do well with it because I don't want to lose my standing in this community. And there's like a ton of upside potential for me to continue to build here. But I think that's separate from like the types of learning that an entrepreneur might have as they are trying to allocate a budget and make iterative progress towards a more specific goal.
Definitely.
So, I mean, there's a couple directions that I think we could go with this, and we kind of ended up in a fun little back eddy here that reminds me of most of our conversations that we have, Reuben, on a regular basis.
That'll happen.
Keep talking to each other. So I think let's stick with the topic of DAOs right now. And I think you're right in really highlighting that there are some really interesting experiments going on at, if we think about evolving into what DAOs can become, and this idea of pushing resources to the edges, and those edges being smaller teams that are coordinating, and there's a number, Nouns DAO and others that are sort of experimenting with it. One of the questions that we get asked quite often, and I think is a place that we're really not spending enough time pulling ideas apart or smashing them together, is this idea of like DAOs and the entities that support them. Yesterday, Moonbirds announced their Moonbirds DAO, which is part of the Proof ecosystem. And I think there's actually like a lot of interesting layers to pull back from that. If we sort of look at the lens of like, how do we structure a great DAO? We sort of see two paths that are being done. One might be emblematic of Nouns DAO, where it's tokens are distributed, tokens represent ownership, value from those token sales go into a treasury, and you have a vote and you make decisions, and all the value is captured in one treasury controlled by one set of tokens. Moonbirds, Proof, and a whole long list of others have these sort of equity-based entities that have been spun up that have raised money. They've also sold tokens. And you sort of end up in this like interesting dance of like, who's trying to create value for who's the consumer, who's the owner. I'm wondering if you sort of have like, what are your current thoughts on how to structure a great DAO and those two pathways?
I think it's helpful to fast forward a little to a future state, if not an end state, then some state where it's like, okay, this is a steady state and we've actually achieved what we want to achieve, or some of it. And what does that look like? So I think that probably looks like there's this diverse group of participants. They're not necessarily all best friends. They can have some way to make decisions, even if they don't agree on everything. And they have a unifying purpose. And that purpose could be governing a protocol. It could be building a brand, or growing a brand. It could be more charitable purpose, or something even more abstract. I mean, you can think about metalabels in that category. So there has to be some kind of purpose, and there has to be a bunch of people like pursuing that. And I think in the end state of that, there's probably no core team, right? Maybe this is a hot take. Maybe my hot take is that DAOs shouldn't have core teams. Or maybe it's more like they can have core teams until a point, and then they shouldn't have core teams anymore. So, and maybe that's not even such a hot take. I think that's just kind of inevitable. So there's probably a bunch of different ways to get there. So to answer your question, I think that each of those pathways could be a viable one. The more centralized entity building, doing the initial kind of drops and building and building product, or the more decentralized, organic, on-chain way. I think the main thing is that like you have to have some credible pathway to get to that steady state. Otherwise, you're always in some kind of middle ground where you're not really decentralized, you're reliant on a few people, or you haven't built something that people can rally around.
So I totally agree from like the perspective of people call that progressive decentralization. How do you go get stuff done? So there's a there that you want to be a part of and can govern, and that works. I think I'm more interested in thinking about sort of the value flow and capture in these organizations. And, if we look at that Nouns model again, theoretically, the value is going to be captured by token holders, right? That's the only asset that represents provenance or ownership or membership in this thing. And as the meme grows in value, theoretically the value of those tokens grow. When we start to see like say a Doodles go raise a big round into an equity company, and then they have NFT collectors that also hold those NFTs and hold value. To me, that seems like there's going to be like a very natural divergence of
Yeah,
needs or value there at some point. And so I'm asking for like, do you think that it's important for DAOs to be built DAO native to start, at least from an ownership perspective? Or, and maybe that's an unfair question to ask, 'cause I could see they're different products, right? And Doodles is not trying to go build a DAO, but Moonbirds is, right? And I worry, I guess, that we're talking about this sort of slash that many folks have bought into this narrative of being an owner in a collection, only to be all of a sudden be seen as a consumer of a collection rather
right.
than over an owner.
Right. That's a great framing. Yeah, you could almost feel rugged in that sense, right? You're just a collector or the buyer. You're the user. You're no longer the owner. And I think I totally agree. Like that's a natural problem to have where you've got different classes or different types of owners, especially if you have NFTs and an ERC20 token and equity and. So the more that you layer into that, the more complex it becomes and the more divergent the interests of those different groups will be. So 100%, like that's going to get you into a sticky situation one way or another. I think in general though, like yeah, I mean, the way to build towards that future could take a number of different pathways. But yeah, to that point, I totally agree.
Yeah, I think like the being pragmatic around how you sort of structure those early days makes a ton of sense. It's kind of this, I love crypto and that everything's immutable and you have some certainty, and yet so much of this is still like, yeah, this is the direction we're going and you can trust us that we're going in that direction. And I don't really see that going away and in the short term, though I think there's definitely room for sort of trustware to step into that place.
Well, totally, because that's the problem when you have like immutable on-chain trustless, but you have mutable social trust required behind that. Yeah, there's only ever going to be 10,000 of these, but then there'll be 10,000 of another derivative, and then we're going to launch an ERC20, and then, we're going to raise funding into our equity vehicle. Like the chain didn't lie, but the people doing the stuff might have misled you.
Yeah, and to be clear, I think Proof and Doodles as examples, they're not in the misleading game. Like people bought NFT collections and they sort of evolved that way. But I think for people who are sitting here thinking about building, and we can take a lot of insights from the things that have worked so far. A place, I guess I'm just trying to make or explore this point of like being thoughtful around the type of organization and where value flows in that organization. I think is ultimately just going to lead to a more compelling project out in the space. And I think in many ways, that's why people are so excited about now, is that it's just really laid that bare, both like the value of memes and ownership and clarity there. And I think we'll see more success in that direction. And yeah, I'm not super bullish on those trying to walk that line. You're essentially saying like the best of both worlds probably doesn't exist, and we should probably lean into one of them. And my experience at C Club is that we have a lot of restrictions on the types of projects we can participate in because of the structure, and that we're trying to do this all on chain. And I see that as an incredibly powerful thing. It means that we get to be really focused, and it's helped shape this world that we're building in such a useful way. I think it's important.
Yeah, I mean that's why we have the T in Seed Club's LFTG stands for
Shout
thoughtfully. And yeah, you only get so many shots at launching something, launching a token, launching a collection, and the more times you shoot and miss, the more diluted your brand and your ownership are going to be, and it gets messy.
Yeah. So I think one of the early trends I saw you deeply involved in was this idea of fair launches. Right. So I was trying to address some of like the inequalities that existed in token distributions, launches through DeFi summer and a bit beyond. And, I think there's probably a number of folks in our current cohort and people out there in the world that are sort of, have this open question of like, how should I launch a token in 2022? And maybe more specifically, like how has your point of view evolved over the last year or two around how to go do that well from a community perspective?
I think there's a bunch of different things to think about at the time of distribution or launch and beyond. And it does continue from what we were just talking about, in that if you're launching something that's going to be immutable, it's going to be permanent, it's going to be on chain, you have to think about the different players in your community. So when we were talking about fair launches in the summer of 2020, DeFi summer, we saw like egregious examples of token engineering, right? And so we kind of responded to that saying, look, if you're trying to build something that's going to be here for the long term, is it capable of being stewarded and governed by users, by the community? Is it going to incentivize people to care about this thing long term? Or is it just going to, be designed to moon and then probably plummet after that? So a lot of that was probably more relevant in DeFi in the context of that kind of financial engineering and tokenomics, which people really employed to drive growth and not natural growth. And I think that in Web3 more broadly, especially in social and DAOs and collectives, I think that we need to really look at the values that we've inherited by default from Bitcoin and from DeFi and ask ourselves, are those the right values that we want to perpetuate in the organizations that we're building? So, for example, in Bitcoin, I look at it and I see censorship resistance, I see global access, and I think those are amazing. Personally, I don't see the sound money narrative as important. Others might. And so in DeFi, the idea of governance, the idea of yield, there's a bunch of those concepts that were super important in DeFi. But why do we bring them into what we're building now? I think we just need to be more thoughtful about each of those things.
I'd love to dive in on that because I think that's an incredible point. How are those things being brought in right now in maybe an unhelpful way?
Well, if you think about token distributions and you think about the way that we inherited them by default from DeFi, which is, okay, you have a certain allocation going to the team, you have a certain allocation to community treasury, maybe you have investors, and then you have those tokens being used in governance. Governance is a weird word that most people probably never thought about in their careers. And now it's like this kind of inherent building block in crypto. And it's only that, a lot of people will know this because of the legal implications of launching a token that might be considered a security. Let's not go down too far down that rabbit hole, but governance tokens were seen as less likely to be a security. So you had this thing, governance, that maybe makes sense in the context of certain DeFi protocols, probably not even all DeFi protocols, and probably doesn't make sense in the context of DAOs. But we have this default idea that DAOs have tokens and those token holders vote on everything, right? Why did we start there? That's crazy.
So I love that because I think I often think of Uniswap as such an interesting project to look at this lens through, because Uniswap is very clearly a governance token. You have governance over the protocol, and yet it does very limited governance really at all ever, right? I don't know how many votes have actually been put forth, and maybe that's a plus for an infrastructure layer type project. But if I ask why do people want to hold the Uniswap token? I think it's more because of the narrative and the meme and the idea that it is going to be the main AMM, and so people believe it'll be valuable to be an owner of a limited number of these tokens in the AMM. And yeah, I think you're right. And I think I'm guilty of this too, is sort of leaning on governance as almost a crutch around creating value, that even if you sort of dive into that, what does that mean? There's a whole bunch of other second order thoughts or beliefs that are actually packed on top of that lead to the implied value or assumed value of the Uniswap token that are probably a small percentage is actually that I have a chance to vote and maybe sway a little bit of the decisions that get made on this protocol.
Yeah, a tiny amount. And more likely, we may capture some future upside if a fee switch is flipped or whatever. I think we can see through the kind of governance token narrative now for most projects. And we have a chance to reinvent that with DAOs and with Web3 communities, because we don't necessarily need to make the same sorts of decisions. And we have a lot more flexibility in what we're building.
So how are you seeing that? How's that being used right now, that flexibility, or maybe experiments that push beyond governance as, say, the utility or the reason for a token existing?
Yeah, I think that there needs to be a bunch more experiments, frankly. I think that, we've seen this transition in the last 12 months with NFTs as a base asset, and C Club explored a bunch of stuff around that. And that's essentially saying, look, there's a bunch of different reasons that people would hold these tokens. The input that's required or enabled from the holders might be different. It might not be uniform, and we're going to figure it out as we go along. So I'm not saying that governance is inherently bad or that voting is wrong, but just having that as the default without thinking through it is kind of worrying.
Crypto is we just come through a big copy paste phase, really, right? And I think I think my time when I got into crypto, and using that word specifically in this case, was very much the late part of the 2017 cycle. It was early 2017, but late part of that bull market. And I very much felt like I was opportunistic, Jess, right? Like what's going on? What can I learn? And the innovation that we were pursuing was really much more of a copy paste or maybe an amalgamation of what's worked. C Club was very much on the other end of that. Like C Club was before a wave and it emerged into a wave. And having sat in both of those seats, I can tell you that it is drastically different. And I see it happening again right now where, many projects will make a pitch or put forth an idea that is anchored on insights that were sort of bubbled up in maybe in our networks 9 months ago, 12 months ago, 6 months ago, and that those who have actually operationalized or executed on them have learned the lessons from it and are already passed, but people who haven't had the chance to actually get into the execution phase are still hung up on these sort of older ideas. So there's just so much copy paste that kind of almost like dirty water in the hose that I think is in the process of being flushed out right now. And it does, I think there's it inhibits and I guess there's an incentive to not really have to think deeply about what is the net new or type of experience we're trying to design for here. And instead it's just sort of like picking it off the shelf and plugging it together and trying to raise some money.
100%. And I think it's natural for people to want to have a playbook, to want to have some kind of well-trodden path that they can follow for, some part of what they're building. But the thing is with DAOs and Web3 communities, that the thing that we're building is new. It's different and it's hard and it's messy. And if there were a playbook, if there were some clear established way of doing this, we would already be doing it. It wouldn't be new. And so I always tell people that it's tough because as a founder, maybe you're building products, maybe you're building community, maybe you're building content, but you want to build that thing. You don't want to spend your cycles, your energy on the organization around the thing. But in DAOs, the organization is the thing. It's natural that it's going to be hard to build. And I think that before anyone starts a DAO or a Web3 community, they should be very comfortable with that.
Yeah, it's actually fascinating the amount of pushback that you get when you say that the DAO is the product. But it truly, I think that's a very fair statement to make, or at least it needs to be one of the products that you're building. And I think, as I think about some of the lessons that we've learned and we see our teams learning, so in governance, so you want people to come and join your DAO and you want to make progress towards a big adventure. So you can do that well. You can get people into your DAO, you can represent them as owners, you can make decisions at that level. But the infrastructure that exists beyond that to actually make it easy and understandable, to reduce the information asymmetry, to make that broader group of people effective at contributing is just pretty much non-existent. And so what we're seeing right now is a lot of teams start to build that out, right? So, whether that's specific types of governance that's being done or whether that's, I was talking to Thomas from Archive last season and, they're trying to curate the internet museum. And so the types of decisions they need to make are around curating the internet museum. And so they're building, a forum or a decision-making tool that allows them to kind of go do that. What's interesting is we'll sort of see the organizational needs. And you see this with C Club as well, where we're like, how do we actually get meaningful input from token holders on which projects should be admitted? And so the application portal was sort of a first step in doing that. And my guess is we're going to see that happen more and more, and it's actually going to probably lead to some generalized tools that other DAOs will use, and in many cases it will just lead to more of a product type experience. And so this idea of DAOs as the product is really going to be a lot more tangible in the coming months and years, in my opinion.
For sure, yeah. And I'm not saying that every single DAO is building the organization as the main thing, and it's just one thing that you have to be conscious that you're building. And yeah, totally agree. There'll be different models that emerge that become best practices, and it'll be easier over time. But we're still right at the start of this thing, and it's also totally fine to build a thing that's not in a DAO. There's going to be plenty more infrastructure and plenty more of these models that let anyone kind of plug and play and just build product or just build content. So I don't want to discourage founders from diving into Web3, but I think we've gotten to this point where we have this fallacy that everything has to be a DAO and everything has to be DAO native. But we need to get to a point where you can build the thing without building the DAO.
Yeah, and in many cases, building the thing first, even if you intend to build the DAO, is the right staging of things.
Right.
Because I think for many folks who are building product in this space, the idea of exiting to community and distributing ownership and the benefits that could theoretically come with that, and having a broad group of people who are really bought in, et cetera, is a very compelling one. I don't know if that's purely ideological or tactical, or maybe it's a mixture of the two. But I mean, do you think most products that are building in Web3, even after they hit product market fit, are ultimately going to be exited to community in some way? Or is it going to be cool to still build a corporation that serves these businesses?
Oh, totally. I think it's already cool, or it's still cool to build crypto products in a centralized or Web2 native way. I think there's always going to be those products that let people interact with Web3 without themselves, those products being Web3. And that's fine. Like, not every component has to be decentralized. And honestly, like, I think that's a pretty good lens to look at any project through. I think that if you want to build software that's going to help people in Web3, fantastic. Like, if it makes sense for that to be decentralized, even better. But, don't sweat it if not.
Yeah, it's fascinating just to think of the, since we're talking about sort of these subcultures or cultural movements, and they are so powerful in crypto, and you could argue is sort of like the core value of so much of what tokens represent today. It also creates this like echo chamber that it can be incredibly unhelpful for folks that are a bit earlier in their exploration. And so I think it is important to, it's a weird thing to say, to normalize building in centralized organizations, and yet I feel like that might be a bit of a spicy take.
Yeah, no, I think that's spot on. And I hope that solves some of the tension that we're seeing. I think this is probably another value we inherited by default, that there should be a token for everything, right? That came out in 2017 in that ICO mania, that everything could and should and must have a token. So, I mean, we're seeing that now, that like the idea that, like you just said, you should build the thing and then think about whether it makes sense to build a DAO around the thing. I think that's a good order of operations. And, we generally work with a lot of founders on that basis. I think probably a lot of investors have fueled the opposite, which is that when token, early liquidity, accelerated timelines, which brings out the worst in VC.
I use this example quite a bit, but I think it's like we're fire starters here, right? We want something to build and grow and throw off heat and to attract people to be a part of. And, gasoline and paper, when you have lots of it, can get a really good roaring fire going. But as soon as that gasoline and or paper runs out, don't really have much of a fire left, when others who are building, chopping small kindling, fueling the coals can sort of withstand various weather patterns, et cetera. And I think it's it can be tough to sort of pattern match or identify people who sort of hold that view, but I think it's becoming more prevalent, and that's probably my biggest hope coming through this wave, is that the new purely speculative folks get to wash themselves out of this world a little bit, and we get back into a place where there is those more people who we hang out with on a regular basis, folks who are just like, this is the thing, I am here, I am in it, I'm building for the next 10, 15, 20 years here, like with that long-term time horizon. How does that change your actions? And it sure means that you're probably not going to go dump tokens on new founders if you want to have a long career in funding or working with these incredible builders.
Yeah, I mean, that is a silver lining of this cyclical crypto market that we have. It sucks when things collapse, and it's always sad to see people lose money. But the silver lining is that, like you say, those folks that were building with paper and gasoline, they're gone. And, the folks that are sticking around building for the long term are still here.
Yeah, and for folks who are maybe new here, those people become a lot easier to identify and to connect with and to build with. And so a byproduct of a previous cycle in that way, and as I'm sure we all are in some way. So I think I'm very proud of myself, Reuben. We've got 50 some odd minutes into our conversation without me leaning on the thing that most people want to hear from you. And I think what's exciting here is, like, most of our conversations, we barely talk about legal stuff, even though you are one of, the more legally minded individuals within the C Club world and have been super helpful on all those efforts. But I think it's, again, almost all of our conversations are exploring these new possibilities, not diving into the legal stuff. But there are like a number of things that have sort of happened over the last couple of weeks. And of course, a lot of folks that are thinking about starting projects need to be very cognizant, or at least contributing to projects need to be cognizant of what's happening in the broader landscape. And so I wonder if you can maybe, a question that gets asked quite often is like, at what risk am I for participating in DAOs or in these internet native organizations? How should I think about it? And I'm curious what your current way of thinking about that is.
Yeah, I knew we'd end up here, but I'm very grateful for the winding conversation it took to get us here. So, yeah, obviously in the last few weeks, as at the time we're recording this, we've seen enforcement actions from the CFTC. Probably that's the one we should talk about most closely in the context of liability of DAO members. without rehashing the specifics of that case, it's important to note that the CFTC settled with the founders of the UKI DAO or BZX, but there's still, as of today, ongoing action against the broader DAO participants, and that's in court. And so it's still not yet determined whether those folks will be liable. But obviously, super concerning precedent or mindset from the CFTC to go after every single token holder who participated in governance as if those folks operated the exchange. It's also concerning, to see them go directly after a DeFi protocol, but, we'll park that for another day. So I think in general, people have been banging the drum. Lawyers have been very loud about this for some time, that there is the potential of unlimited liability for all participants when you don't have some corporate structure. So there's always going to be a spectrum of the risk that you take on when you enter a new venture. And for a long, long time, having a corporate structure was the way to protect yourself against that. And I think for most use cases, that will continue. But I think before even going into those specifics, it's important that we think about what a DAO is. Like a DAO, like we were saying, a DAO is an internet native organization. And that means that it's sovereign, it's independent, and doesn't rely on any state or corporation or anything like that for its existence. I think that's a very pure DAO. And there's a bunch of organizations which don't quite meet that criteria, but you'd still call a DAO. But if we're thinking about where this is all heading, we're thinking about building censorship-resistant, resilient organizations that are going to be here in 100 years from now and are going to be internet native, then it's hard to reconcile that with something which relies on a corporate structure for its existence. So that means, to put it another way, if you want to be independent from the state, then you can't really rely on the state for liability protection, which is a function of the laws of a particular government. So on the other hand, if what you want is that protection, then great. You just have to subject yourselves to the corporate laws and being a legal entity within that system. So that's a long way of saying that for some things that are being built, you certainly want liability protection and you probably want some corporate structures. I'll say that the end state of any DAO should not be to have a corporate structure. And that may be a hot take. I think that there's plenty of use cases in the short term which could utilize corporate structures, but I think the end state of something that calls itself a DAO should not be to have a corporate structure. This is like another hour-long conversation.
These are sort of the cases that I think everybody in the space watch pretty closely, and I think mostly for the precedents that are being set. And I think I sort of have, I'm of two minds. Like one, I want nothing more than clarity for our teams and how to go and build in the space. And I think one could argue, well, if you want clarity, go build a corporation. I think we sort of established why we both believe that there's, work and worthwhile work to be done in trying to pursue these new types of organizations. I'm dismayed to a degree because of that clarity seems to become from not from being like, here's what you should do, here's what you shouldn't do, and here's how you can build this thing together, but rather enforcement action in very weird ways and almost manipulative ways towards trying to build more of precedent, I think, in some way, or at least social precedent, even because I don't think all these legal precedents are actually being set here. But
totally. It's very frustrating to see regulators act in this way. I think at the end of the day, though, this is what they're going to do. They're going to be reactionary. They're going to move without any coherent policy, but they're just going to kind of swing their hammer at particular nails that they see as easy to drive in. So that's the world we live in now. From a practical perspective, what does this mean? I think it does mean that if your DAO is doing stuff that has liability, a significant liability attached to it, you need to have some corporate structure in the short term. That doesn't mean that the whole DAO is a corporation. This is like even another hour of conversation about the specifics, which, one of the benefits of going through C Club cohorts is that through the accelerator program, we'll talk in detail about a lot of this stuff. So it's one of the things I enjoy talking about with the projects that go through C Club. But there is a spectrum of risky activities. If you're running a ski resort or a water park or something like that, for sure, you have liability protection, you have a corporate structure, you have insurance. If you're collecting JPEGs with friends on the internet, that is a very, very different risk profile. And to say that there is a one-size-fits-all model is so obviously wrong.
Yeah, I love the pitch for C Club there, because I think what's the consistent thing, at least through all of our work together, is just how nuanced all of this is and ultimately how the goalposts move quite a bit as well. And so, the fact that I can rely on your and other collaborators' brilliance to help sort of make these decisions, I think has been invaluable. And so definitely have to leave it as a tease here, I think, not purposely, but just not the venue to be able to get into a useful discussion at that level of detail. But I think, so I see news happen, I send it to you and I go, should we be concerned? And I think generally you are good at sort of describing, as you just have here, like the range of sort of possible realities that exist here. And so I think people need to pay attention, be aware, be thoughtful, engage a legal professional. Obviously, this is not legal advice. We're not your lawyers. I just wanted to say that. I feel like you have to say that a lot, but I feel like I'll say that right now. And yet, it hasn't slowed anybody down. So like, let's go.
Yeah. 100%.
All right, we're coming up on the hour, and I've been asked by our production team to test out a new way of closing out our podcast. And Reuben, since you were the first guest of season 3, can't believe we waited till season 3 to get you on, but first guest of season 3, sort of have a lightning question for you. Lightning question, hot take question, I don't know. I think that's some of the core value that C Club provides, and what have benefited so greatly from is the sense-making network that we've built here, of which you are one of those main nodes in. I'm curious, when you sort of think about your sense-making network, who are those people that are out there, either have been out there or maybe are new to the space or building something interesting that you're looking to get sort of signals on the alpha, the direction, the insights that are making you smarter in your job or in your passions within Web3?
Yeah, well, right back at you, Jess. I think that without chilling too hard, C Club is like a focal point for a lot of those folks. And I guess my challenge to C Club is to keep facilitating that, make that happen, make those conversations happen at a deeper level. I'm still on Twitter, but I've kind of taken a little break because of the noise and its inability to kind of get through to that signal. And I think that those conversations have to happen in a more nuanced and thoughtful way anyway. So that's my plug for C Club, and my challenge to C Club is to keep making that happen.
Yeah, I think that's a thing that we've recognized. A whole other conversation. We've been thinking a lot about the containers of which we bring people into community, or where community lives within C Club. And our cohort's a very clear one, but it's incomplete, right? There are other containers that need to be created to both support alumni as they move into the next phase of their building. But then there's also this entire other world of, thousands of people who are in our Discord, tens of thousands of people who are passionate and fascinated about building and participating in the space that we don't have a container for right now. And I think a lot of when I think about sharing, I've been working on this NFT as community tokens post forever. You guys sort of be like, yo, you better publish that. And I think when I sort of explore where my hesitancy in some of this, sharing of it is the venue, and is the lack of nuance, and is the difficulty in encapsulating the totality of the trade-offs and nuances that exist in some of these things. And so it's to your point earlier of people saying, well, I want a playbook, and in many cases, thought leadership articles, et cetera, if done truly well, I think are writing a playbook. And I go, okay, well, is this actually effective at being a playbook? That's not me trying to get out of writing this piece. It's coming out. I think we can go do it well, but I do think that I think there's better places. I think communities where those things live. I think it's within these containers where there's trust that exists and sort of a promise to sort of engage in a meaningful and optimistic, trust-based way. So yeah, I agree.
Totally. And a big part of that is actually walking the walk that we talk in the thought leadership pieces. I agree with you that the good ones of those pieces kind of help piece together a playbook, but that's just one person's perspective, and maybe it's even only theoretical. But what we see with C Club is we actually walk that talk, and we walk alongside all the projects. So, we actually get to see everyone kind of doing it together and actually kind of discerning what's going to work and not just what should work.
Sometimes I feel like I get out over my skis where I'm like, oh, I have such certainty in this thing, and I feel very uncomfortable in that space, because I think the stance that I've always been in at C Club from day one, and I feel very much that way today, even though we've progressed so far, is this explorer's mindset of being like, we have some insights, there's a lot more questions than answers. So how do we approach making progress imperfectly but consistently and with momentum? Right. And I think it is a very big difference between even the idea of thought leadership piece is here's my thoughts, and right. They will lead you, and I will empower you, and you will do these things, versus I often say we don't know what the hell we're doing. We know some things, but this totality of things that have yet to be figured out is so great that I don't know how. I can't honestly and authentically bring myself to engage in these communities without really coming from that point of view of standing here with you. Let's go figure it out.
100%. If you look back to the start of C Club, it was in some ways incredibly audacious to start an accelerator and a program when we were all just figuring it ourselves. But on the other hand, that's the only way it could have worked.
I think that's where we're going to leave it, Reuben. Appreciate you jumping on with me today and sharing with us. What's the best way to connect with you right now, or if you have an ask of our audience?
Yeah, well, firstly, reach out to me through the C Club network. I love getting involved. You can also find me on Twitter at Bramanathan. And yeah, I'd love to hear from you.
If you're building something awesome in the frontier of Web3, socials, trying to build an incredible product in crypto, you should definitely check out Ideo CoLab Ventures. Very proud to have them as partners at C Club and for your continued support. So thank you for that.
Thank you, Jess. It's a pleasure.
Hello, friends. Steph here, Media Team Steward at C Club. If you like this episode, please subscribe, rate, and review Building at the Edges. This helps other Web3 builders discover these valuable insights. And tell us what you think on Twitter. Tag us at @CClubHQ. Thanks for listening. See you on the internet.